check it out. If you're a wholesale account executive and your wholesale company doesn't have very fast turn times and you're tired of getting beat up by your brokers going, come on! You may want to look at REMN Wholesale. 3-day turn times on virtually everything with premium pricing on everything. Why wouldn't you want to take a look at that? Just click the banner you see right here on your screen right below the video or over on your right. Fill out the form and then, see what you can do over there. REMN Wholesale, 3-day turn times.
So we are too close to Christmas for me to comb my hair, brush my teeth, or generally get clean. That's why I'm wearing a hat. You're gonna see this for the next couple of days. Hook 'em horns. On with the show. So here's a graph of CFPB enforcement actions since 2013. Now you'll note how they spiked really big in 2015, 16, and 17. Now those were the Richard Cordray years. Note how they fell off after that. Those were the Mick Mulvaney, Kathy Kraninger years. Now we bring this up because that big old spike that you're looking at in 2015, it's coming back on January 20th, 2021. Lenders, I really hope that your marketing and your mortgages are all above board because we are going to see the return of compliance in a big way. I'm telling you, in a really big way.
That's right, and with that said, here's a quote. We are extending the temporary flexibilities related to verbal verifications of employment and power of attorney to loans with application dates on or before January 31, 2021 from December 31, 2020. So says Fannie Mae.
Because of the Corona-19, verbal verifications of employment and appraisals, which were set to expire on December 31st, 2020, are now being pushed back to January 31st, 2021 at least, meaning the lax verifications of appraisals and verifications of employment are going to continue for the next couple of months at minimum. Now, here's the thing. Your mortgage company or your wholesale lender probably has overlays in place to make this a moot point. If that's not the case, just understand that the status quo will be in place for at least the next couple of months.
And as we discussed yesterday, the average prime offer rate, or the APOR, not the prime rate, which is higher. The APOR in the United States, again for a 30-year loan, is 2.76%. Now, if you are writing a loan right now with a 4.26% APR, you've got a qualified mortgage that meets safe harbor. That means you and your company theoretically can't get sued when that borrower defaults on their loan and the sheriff shows up and kicks them and their lazy boy out of their house. That's the idea. So remember, 4.26%.
Okay, so what really happened here is the CFPB just changed the qualified mortgage. In short, they made it easier for you to charge your clients a higher interest rate. So loan officers, change your comp plan right now. Add another 100 basis points to what you're making. Just kidding, don't do that. The changes made to a qualified mortgage, is it going to affect non-qualified mortgages, Frank? What do you think about this? Because here's the thing, most non-QM loans, like with Oak Tree, they're coming in under a rate of 4.26. That means non-QM loans could theoretically be QM loans, right?
I mean, yeah, if it's just a matter of APR now,
That's it?
Really?
You're not QM or not QM?
This whole thing is just so confusing. I don't know how they're tying APR into ability to repay. It makes no sense.
It makes no sense.
Okay, so anyway, the reason the CFPB is doing this is to deal with the QM patch. One of the 2 rules the Bureau implemented finalizes a June decision to establish a pricing threshold that effectively replaces the current debt-to-income limit of 43%, which some lenders and investors have called too restrictive. In place of the DTI, the general QM final rule gives lenders relief for loans capped at 150 basis points above the average prime offer rate. Whatever.
I mean, seriously, don't they have anything better to do over there at the CFPB? I mean, can't you go sue a bank or something? My God, this makes no sense. But let's run with it, guys. This is a typical lax of guidelines that is not well thought out and can lead to, yes, we've heard this before, unintended consequences. Seeing that most prime loans are written in the mid-2s right now lenders can write loans in the 4s if they choose to and jump their rebate up by like 5 points and still meet safe harbor. Now, the market will, as it always does, keep you from charging more than what you're currently doing. That's called competition. But now it's theoretically possible, which means, some lenders are gonna probably try to do this and hike up their interest rates. Just not you, we hope.
Okay, check it out. In the middle of a pandemic, we just recorded the largest year over gain in home prices in 29 years, or to put it another way, the biggest price gain since this.
Life is bigger.
So this is what the legendary Super Saiyan
I myself cannot.
Yeah, since 1991, can you believe it? We are aging ourselves over here. Now, we just did a conference call with Barry Habib. He believes the housing market is going to remain strong in 2021. So even if we see a hiccup from the corona shutdowns, the number of buyers of the markets are going to sustain values in a really big way this next year. If property values go up by say 10% next year, that's high, but you get the point. And your income increases by say 5%, one might think affordability is getting more distant. However, understand that all of your income is not going to go to your housing expense. Meaning if 35% of your 5% increase in pay goes to the 10% increase in home values, the price of said house is cheaper tomorrow than it is today in spite of the fact that values are going up.
Just food for thought, or for the astute agent and lender, a great talking point to get those borrowers off the shelf and into the market. Do us a favor, man, leave us your comments here, forward, share, and subscribe. We hope you enjoyed the show today, and you can get our mobile app by doing this.
Download the National Real Estate Post mobile app today. Available on Apple Store and Google Play. Just search National Real Estate Post.